there's lots of big topics that we can talk about, but let's obviously talk about the big stories right now. Obviously, the stock market has been rallying, and the S&P 500 is just about 6,000, which is a pretty good number to consider where we started from at the beginning of the year, up substantially, more than 25% for the year. But now we're starting to talk about what 2025 could look like, and there was a survey out of all the big firms, and they ranged from 6,600 to 7,100, Brian, on the S&P 500. So that's somewhere between 7 and 17%.
Sure.
So it's setting up for another good year. But, it's not all, as you say, rainbows and puppies right now, right? So there are some big topics. So let's just kind of rep through them right now. And let's start with where Danny talked about, and that's China.
That's right. Yeah. So with China, I think that they are really struggling to get some traction with growth in anticipation of perhaps tariffs in 2025. Candidate Trump really made it very clear that his intentions were to increase tariffs, especially on China. Now, will those tariffs stick? Is it just a negotiating tool? We can get into that later. But the response from the Chinese government has been a little bit, I would say, weak beer so far
tepid.
year to date. Yeah, very tepid, because first they were really focused on let's improve state and local government finances. And so as far as the amount of debt that they have, and then they focused on real estate, and they were really ignoring the people, consumption expenditures. This past week, they finally came out and said that they really want to make the consumer the focus of policy in 2025. They would like to see a vigorous recovery there. So right now it's all talk, but at least this past week, it seems like the government over in China has gotten the message that if they want better growth, it really needs to start with households and the consumer.
And you saw that Trump's team invited President of China to the inauguration, which is really unbelievable that he did that. But you think about exactly what you're talking about. I mean, they have a loose Fed policy at the moment. And so their monetary policies, they're trying to do some things. They don't mind about devaluing their currency. Some of the same arguments that we're having here in the United States.
Oh, absolutely. And that was another thing is the People's Bank of China, so their version of the Federal Reserve over there, they said that they were going to adopt an appropriately loose monetary policy. Now, in the jargon of the People's Bank of China, that means basically a lot of stimulus. That in 2008 to 2010, that was the stance that they adopted to try to accelerate growth. And then they shifted to a different, just providing some stimulus, but not quite as much. So in their jargon, it is about monetary policy and then also fiscal policy, but it relates to currencies. They are allowing their currency to depreciate. Year to date, their currency is down roughly 4% relative to the dollar. So if you think about if we impose tariffs on them.
But the dollar strengthened.
Yes, so the dollar has been strengthening, and it's because we've got better growth, we have fairly low inflation, interest rate differences between the investment opportunities here and elsewhere are helping to keep the dollar strong. But in 2018 to 19, the Chinese currency depreciated almost enough to offset a lot of the tariffs that were imposed against them. So we could see something similar here.
Right. And folks, when we're talking about currencies, it's always in relation to another currency. So if the dollar is strengthening and we're watching the Chinese yuan start to weaken, it's a combination of those two things. Let's switch topics. I was watching CNBC and market openings the other day, and DJT was there ringing the bell on the floor, and Kramer came up and interviewed him, and some good stuff came out of that.
That was a really interesting interview, and he's been giving, I really appreciate a lot of the interviews that he's been giving, and also some of the tweets, just get an idea about what are his priorities. And the reason why he rang the bell, that was because Time Magazine Man of the Year, right? And so he was up there with his wife, and then also the CEO of the New York Stock Exchange, and also the head of Time, the magazine. And he has been talking quite a bit about what he wants to do in terms of not just tariffs, but then also most recently he was talking about automation with a possible port strike. We know that there has been this peace accord basically between the owners of the ports and then the Longshoremen's Union, but that has really come just before his inauguration day. That agreement is coming to an end. And so what are we going to see for East Coast ports? Around about the same time, people are thinking that we might see tariffs being imposed as well. Could this be kind of a January risk on the horizon?
Yeah, and there are risks in front of us for sure. So let's just get to the final thing that we do want to talk about, and that is really the rest of the central banks. And central banks here in the United States, obviously, one of the things I was trying to get you to say is that he said he wasn't going to fire Powell.
Oh, yes, that was huge, too.
And that was the big story that came out of there, that he's going to let that run out. But thinking about other central banks around the world, they continue to loosen their policy when the Fed right now is perhaps trying to at least try to keep it even.
That's right. They are the Fed. They're meeting this upcoming Wednesday. Market is pricing in high probability that they'll cut by 25 basis points. Right. But then what do they do in 2025? You compare that to the Bank of Canada. They did another rather large rate cut. European Central Bank, they did another rate cut and kind of signaled that they're willing to do quite a bit more. The Swiss National Bank, they did a big rate cut because their currency has been appreciating too much. Now, on the flip side, you have some place like Brazil where they're actually hiking rates. But developed market central banks are cutting rates, and that can create a bit of a gravitational pull on rates here in the United States. So if those rates over there are coming down, the Fed might feel like they want to follow suit.
I don't want to argue with a guy with a PhD in economics, but I've been a Fed watcher, and for 20 years, I've been pretty good about predicting what the Fed is going to do. I don't think that what they're doing is going to affect what the Fed here is going to do, because usually our Fed leads them, number one.
Yep.
And number two is right now, I wouldn't be surprised if the Fed cuts back on their cuts in 2025.